We're taking a field trip today. We're out of the office, and we're pleased to have with us Ryan Katz at USCF Investments. The focus of today's discussion is commodities, and we're going to examine them from an investment angle. Ryan, it's great to have you with us.
Thanks for having me, Ron.
So people have traded commodities, as you know, throughout history. They're still doing it today. Back then, markets, of course, were more localized. Today, markets are global. So how has that change from local to global impacted the way people invest in commodities?
Sure. Well, it impacts pricing worldwide on a global basis. You can see this in a great example is looking at crude oil versus natural gas. I mean, with WTI and Brent, there's generally a spread that exists between them. And of course, there's different grades of crude. How hard crude is to extract and transport can have an effect on price. But generally, Brent and WTI move in the same direction at the same time. The opposite is not the opposite, but it's that does not hold true with natural gas because it's not a globally traded commodity yet. Export capabilities and capacity are coming online, and over time, natural gas will become a globally traded and priced commodity. But as of now, really the price of nat gas in the U.S. is dependent on supply and demand factors domestically, and European nat gas prices are going to be correlated to European supply and demand factors. So if Europe has a specifically cold winter, we're not going to see a soar in prices here in the U.S. But again, as export capabilities come online, that should change, just like any other commodity. As they're more traded more globally, they will be priced more globally as well.
So what I'm hearing you say then is that certain commodities are more global than others. Some are still localized. It just depends on the commodity.
Yeah, absolutely. And again, there's many commodities that are becoming more and more globally traded over time. And nat gas is just a great example of one that's on the cusp and growing.
Commodities are a major or core asset class, just like stocks, bonds, real estate, and cash. Yet commodities, when you look at the typical investor's portfolio, are usually underrepresented or not represented at all. Do you think that's by choice? Do you think it's by accident, or maybe it's just by a lack of education?
I think it's a little bit of all three of those things. I mean, commodities are a little bit underserved, as you mentioned, likely because they're a little bit different and people are not all that comfortable with commodities as of now. They operate in a different way with the dynamics of the futures market. People maybe have had a stigma attached to commodities in terms of being highly levered or highly risky. It's also been a poor decade for commodities, but when you look at the long-term historical research, commodities have similar return and risk characteristics that you'd see in equity markets as well. So I think the onus is really on investment professionals to educate themselves on commodities so that they can in turn educate their clients and take advantage of the asset class, which seems to be a potentially promising asset class going forward as we near the end of the business cycle.
Buy low, sell high.
Absolutely.
Let's talk about the role of commodities and look at them in the context of a diversified portfolio. So we're assuming a portfolio that has exposure, let's say, to stocks and bonds, real estate, cash. So we throw commodities into the mix. What type of impact or effect do commodities have on the overall portfolio?
Yeah, absolutely. So commodities have a very low correlation to equities and a slightly negative correlation to fixed income. So of course, going to dampen the volatility within your portfolio. Commodities tend to zig when the other asset classes zag. So bringing that diversification is going to stabilize the portfolio. But also, as we touched on earlier, it could be a deep value strategy right now as well. You're looking at a very wide spread, nearing all-time highs between equities and commodity markets and prices. So there's a value play that can be had there as well. So low correlation to stocks and bonds, comparable return and risk profiles of stocks and bonds, low correlation to fixed income as well, high beta to inflation to stabilize portfolios over the long term.
And two, you think about history. I mean, how many times have we seen this? A reversion to the mean. And right now, there hasn't been that with commodities just yet, but history shows that over time there tends to be a reversion to the mean more times than not.
Absolutely. And again, we're seeing a pretty wide spread right now between equities and commodity prices.
If you're just joining us, we're pleased to be talking with Ryan Katz at USCF Investments. Now, I cringe when I hear financial advisors and people say that they don't understand commodities, because listen, if you drank a cup of coffee and had poached eggs for breakfast, and then you put on your gold wedding band, and then you filled up that gas tank with gasoline, well, then you absolutely understand commodities. They're everywhere. And so the other big point here is that commodities, unlike securities, are tangible. You can feel and you can touch them. And last time I checked, you can't store securities in a wooden barrel. Talk about that.
Yeah, absolutely. So in times of turmoil throughout history, governments and people have tried to tie financial instruments to the price of commodities. You know, in turmoil, obviously your currency can go to zero, essentially, but oil, gold, silver, cocoa, other commodities are always going to have some sort of tangible value. Yeah. So you don't, and each commodity has its own idiosyncrasies as well, right? With diversified commodities, you don't need to know everything about every specific commodity, but over the long term, it's going to benefit your portfolio. It's similar to investing in the S&P 500. You don't really need to know everything there is to know about Apple, and the same goes for broad commodities.
Looking at USCF's menu of exchange-traded products, it really offers two distinct approaches to commodity investing. On one hand, you can take the more core exposure, diversified in a broad sense. Ticker symbol USCI and SDCI are products that do that. The other approach is a more concentrated or focused approach. Ticker symbol USO, USOU, and then USOD. How do you use these two different approaches? How do they complement each other?
Yeah, absolutely. So at USCF, we would definitely recommend diversified commodities across the long term. And USCI and SDCI track the same index and give you exposure to all 6 commodity sectors. So you get your commodity beta. You're not overexposed to any specific commodity or commodity sector. With the tactical products, of course, you can speculate on a specific commodity, want to track it very closely, control your position size, of course, to minimize risk. But you can also overlay single commodities as well to your other exposures. For example, if you're bullish on the economy, you might want to overlay USL, our 12-month oil fund, along with your diversified commodities exposure. Or if you're bearish on the economy, maybe a gold overlay to your diversified commodities, so GLD, say. Likewise, if you have energy equities exposure, but want a little more exposure to the price of energy and less of the equity factors that come along with the energy equity funds, perhaps a USL along with XLE or whatever else that you may be using could be an interesting overlay strategy as well.
Yeah, so what I'm hearing is you can basically customize your specific strategy, tailor that to whatever your investment outlook is.
Yeah, absolutely. And if you're not certain on the economy at all, you probably don't want to overweight or underweight, but obviously some overlay strategies that you can deploy.
Yeah, and in that case, just like a broadly diversified commodity index fund, you're not really expressing a opinion, for example, on any specific commodity.
Correct, absolutely.
So, Ryan, well, thank you very much for your insight. Great job. It's been fun. Be sure to visit uscfinvestments.com to learn more about investing in commodities. I'm Ron DeLegge with ETFguide. Be sure to follow us on Twitter. @ETFguide is our Twitter handle, and subscribe to our YouTube channel.